clear. So hang siap, clear. Okay, let's go to the point. Yeah, got wind sound. So no wind sound, no problem. Got wind only, we can have a better knowledge. So we have to sit aside at the seaside, and then we relax and trade. We are not sitting in the room and then we get tension and then we cannot trade. You see? Then you have a tension. How I don't know how to. Yeah. Okay. Today we are continue with the candlestick chart pattern. So that is the title for today. So the chart pattern. Where's my this one? My drawing tool is not out. So let me open the this one, the tools. So okay, sorry. So today we will start with the still with the candlestick. So it still hang around with the double volume. So we want to have the important thing that we use double volume in the post bottom fishing. So remember, still on the bottom post bottom fishing, not the bottom fishing. So today we are focusing on the gap up double volume. So gap up position at the double volume. So you can see here. So the on the left hand side here. So the branch of the dark colors candlestick represent the double volume K, and this is not necessarily a double volume. So this is the double volume is referring to this one. Yeah. So dark colors referring to the bull or bear. So it doesn't matter. It's a bull or bear. See, it still work. So normally at the moment. So at the moment, why is on the 3 days to 21 days? Because this is on the post bottom fishing. Remember, this is a post bottom fishing. So everyone can remember where is the bottom fishing and then where is the post bottom fishing. Otherwise, you will be asking me again, where should we trade using this method? And then this is the post bottom fishing. So end of the day, you were seeing that this is the bullish volume, double volume or the high volume. The price is breakout the double volume higher price, then the breakout entry one with double volume. So entry 2, 3, 4, if you like, is your choice. Yeah. So after the double volume. Okay. So this is the detail that we want to share. I want to share with you today. So before that, let us go to the class outlook. So today we want to also want to say that in the Homely link there's no call buy and call sell. So it's just for education. Okay. So today focus on the post bottom fishing near to the pull out. So it's quite near to the pull out position already. So you somewhere here. Okay. Later on they pull out already. So this one, then you have to look for another class. So now we are talking somewhere here. So post bottom fishing somewhere here. This area. So we use this pattern to trade. Okay. So after that, we are talking about the important here you need to know is a key resistance level and upper bordering of the trading range. So this is important. You need to know where is the key resistance level, and you need to know the upper boundary of the trading range. So it's important. So after that, we're talking about the area of value. So important. So in the stock trading, in anything that we do, we need to know the area of value. For example, you buy this software. So what's the area of value? So where actually this one helping you is the same. So it's similar. So after that, we cover up the pattern. So the gap up over the double volume. So after that, of course, the homework, the back test that you need to do. Okay. So everyone get ready, and you see Vivian know that post bottom fishing. Only Vivian understand. Okay, the rest maybe not. Okay, again, whoever want to do the coaching, so coaching, so teacher Karen and then teacher Sam will help you to do the coaching. So there will be you quickly and go register and sort it out when is your actually due date is on the 28th already. So whoever not register, you go to ask Karen whether we can, teacher Karen, whether you can do or not. Okay. So there is a bit of advertisement for the class. Okay. So still we're talking about the training. So train, how to train you, how to do train you, how to analysis and backtest. This is a first step, very important in the stock trading. If you're not doing analysis and backtest, you are gone case. Okay, I can straight away tell you gone case. Yeah. So secondly, learn about the technique and selective and familiar with the technique. Otherwise, you also gone case. Okay, so gone case. So the last one also you need to trade and then specific and follow the trend. Otherwise, you also gone case. Okay, gone case mean you lost. You lost in the this one in the stock market. So after that, we're talking about the area that I was using this area somewhere here lah, somewhere here before the pull out position somewhere here. We are looking focusing on this way, this area. So after the bottom fishing, we are focusing here. Not yet we're talking about this one or this one, this one and this one. So you might be learning after this class. Yeah. So we're talking about key resistance. What is a key resistance level that we're talking about? So it's very easier. So you will put in the wording, it's very easier. So we're talking about referring to the price level that where the stock or any other trade instrument. For example, you want to do this what you call that, the 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 others gold or whatever also can. You want to trade, so you have to know that the this level is the past the historical difficult rising area. So this is where actually many members or traders very hard to determine what is the actual level of the trading. Okay, you want to learn more? Now follow me. Yeah. So uh, if you want to learn more, you follow. So basically here we got talking about the traders and investors often pay attention to this level because the price successfully break out to the key resistance. It may be indicate the bullish signal and the potential for further price appreciation. Okay. So if you have a stock, for example like this, I want to ask you a question. You look into this chart ABC, which one is the key resistance level? Can you put into your comments in the chat room? So I want to see 100 comments. Otherwise, I don't want to start the class. You see? Give yourself a try. If you cannot find this, definitely you don't know where actually you should buy, and then you make money. So otherwise, very hard. See, very hard for you to know which one actually for you. Or you see the price increase, and then you say this is a very strong. If you see the price fall, then you say this is not strong, or very can be very strong also. Because if it's too strong and then cannot break out, then the price reverse. Okay, reversal. So the price is swing low and lower and lower and lower again. So because this is very strong and break out and then go up again, the candlestick. Okay, so many people try to understand. Yeah. So so you can see that so we're talking about the key resistance level. So the moment we're talking about key resistance level, these three can be a key resistance level. These three can be one of them or can be all of them. So no problem. So you see, this is very important. So somewhere here they try many time, and then they break out and then pull out again. So this is where you can see that the price going down. Actually, they are gathered here also. So in the future also somewhere here. So this is A also, one of the very important key resistance level. So if you are here, so this is a key support level for you. So you try every time to go down, no, but you want to go up also cannot. So after that, the price brought down, so go down. When they want to push up, cannot. So finally, only they push down, push up. After push out, this is another key resistance level. So are you following me? Is it everything okay? Or you get lost of connection with me? So you lost a connection and then very difficult for us to continue. Yeah, or lacking. Okay, lacking is not my problem. So how everyone is lacking or just one or Hello, everyone can hear me? Can hear me? Reply in the chat room. You can't hear me? Yes, I can hear. So only one. So let also. Let me let now. Okay. Okay. So let us be very consistent with talking about the key resistance area. So where is the key resistance area is a question that very difficult to answer if you don't have the knowledge of analyze the market. So for example here, okay, how many candles to consider a key resistance level is very good question. So you have to ask yourself how long actually the period you want to analyze, is it? So you want to analyze 10 years? That would be, not look at myself, I'm not handsome either. Okay. So how many candlestick actually you want to consider as a key resistance level is very important. So how many days in the other word? So how many days actually you want to do in the area? So if you're talking about just now I talking about 3 to 21 days. So many people ask me how about more than 21 days? Okay, yeah. How about more than 21 days? So let us see. So we can categorize this very simple example. Okay, very simple. I will not make you complicated and all this thing. So you learn too many and then make yourself uh, in the dilemma, don't know how to trade. So that's why I said if you're sitting on the beach side and then you trade, then better. So you're more relaxed and then you can enjoy the natural and then you trade better. Okay, bottom fishing longer is better. So my answer to you is you want to trade some stock at the bottom fishing, the price go down more than 30%. For example, negative 30%. So we consider as a bottom fishing. Okay, bottom fishing here. So if this one can be 100 years on the sideway and then go up, or better lah. But we cannot wait so long, is it? So more than 21 days for the long, the bottom is better. Okay, so that's the answer for you. So for those who don't know, this is the answer. How about the post bottom fishing? So the price go up already. How about this? So anyone got the question? Got the answer? How many days you think that you want to consider this level is important and then very important position? If they spread out, sure I want to buy. So if this is breakout, sure I want to buy. So give me an answer. So 1 day, 2 day, 3 day, 40 more, longer better, within 21 days. Okay. Lim said 1% said or within 10 days, 5 to 8 days. Okay, 3 to 21 days. Okay. So if you follow the class, I say already. We are focusing today is on the post bottom fishing. Therefore, we are taking about 3 to 21 days. Okay, so we put about less than 21 days. So we want to do as a very important key area that we want to focus on today. So if you see you made this type of chart and then they spread out, then you can talk about doing that. Okay, hopefully you understand. So second thing, after you know that this is a key resistance area, what you need to know the next step is the what is the area of value that you want to trade. So very important. For example, breakout here. So the price breakout here. So what your estimation of to this one? So how big is the area of value you want to trade? This is very highly important. You see, some trader the area value they determine somewhere here. They trade until they think that they're dreaming and trade until 100%. But the next key resistance level is on the just 1% of the range. 1% from the price that you bought in, and then 1%. So after that you can do. So this is not 21% anymore. 21 days anymore. So we're referring to the price range or zone on the chart. So that is called area of value. So how to determine this is after the price breakout, you have to know that you have to analyze that where is the price will be hitting the next key resistance level whereby the candlestick or the price cannot continuing going up, and then maybe on the sideway or maybe on the downside. So it may be on the little bit of the swing swing low a bit. Okay, not the creating the new low. So it's on the swinging a bit low. So how to do this? Okay, it's very important that you have to be determined by various factors. So not only single factor that will be giving you a very important. See? The area of value you have to talking about the resistance and support level. So the key one, not everything that you want to use you saw you think that is a very important. You see, the next one we're talking about supply and demand dynamics. Okay, this one I think don't have time to teach you. So this is highly important. If you're talking about the supply and demand in the stock market, I need a long time to teach you. Not easy. And if you understand this, then you can see that that is very important on that particular range. At this particular range, we will see that there's a demand and supply on the very dynamic side. So if you understand this, for sure you can identify the area of value, and then you will identify the next resistance level. Therefore, you can draw out your area of value. So until where you to trade. Is it okay? Still following me? The next one is the price pattern. You will have that or the other technical indicator that also can help you in the sense that you should make yourself very clear when you want to do this. Okay, so in the bullish scenario, the area of value may consist of the support level. So the representative range of the where the buyer are expected to enter the market, and the support of the price, preventing it from falling further. So that is buy in the. For example, we enter at the support area. So where is the next one? So you have to make sure you know how to identify the first thing that I said, the key resistance level. Otherwise, you are wasting your time in the trading. Wasting your time, so wasting your time to test, and then you fail. Okay. Whereby in the bearish scenario, not many in the Malaysian market if you want to do to short the market, yes, you can use this in the reverse side to make your to calculate your support level, because you want to short the market. So in the bearish scenario, the area of value may align with the resistance level, so indicate the range where the seller I anticipate to emerge, or limiting the price to be increased. Okay, so understand. So first thing you need to know is a key resistance area, this area. Second, you need to count your area of value. Otherwise, very hard for you to do in the stock market. Clear? Clear? Give me a reply 888 in the chat room, so we can know that you understand how to do it. Okay, how to do it. So we know all these things, and how to do it is very important. You see, does double volume work to identify these two things? So you have to ask yourself, does the double volume can be used to identify this key resistance and the area of value? The answer is yes or no. So you can put in your comment in the chat room. So not many people reply. So, and also not many people in joining us today. So okay. So yes. Lee say yes. The rest also follow lah. So I see the I mean the members is like that. So one person say yes, majority follow. Okay. So the answer is yes, in the way that if you know how to use breakout, and then you buy, this is the key resistance area. So this is the key thing. So after this one, you can follow the next one. For example here. So for example here. So you see the price shoot up and then go stay here. So it's very important for you to understand. You see, I tested working. Okay, Slim said tested working. So working no need to teach already. So you can just go to this one. Okay, on the week chart, if you want to use in the week chart also can. This is a week chart. Using the volume is okay. So people scared already. Malcolm said week chart can use. Day chart cannot. So there's many people that think that why you want to use week chart and why you want to do day chart. So if you want to use week chart, for you if you are busy traveling and you don't have time to look into the charting, so you can use week chart lah, easier lah. 1 week you look one time, so you test the market using the week chart, you test the market using the week chart is okay for you. So you busy and a big businessman, you don't have time, so maybe you fly 1 week 5 times, so 10 times, so you don't have time, but you can test the market using the week chart. Otherwise, for many members here very busy looking at the charting every day, want to look at the chart, mini chart, 1 minute, 5 minute chart. You can do at the day chart. Okay, for the day chart using double volume, so you can see that this is a YTL Power International. Everyone using buy with YTL. If you have, you can put YTL in the chat room, you see. So I congratulate you to follow the class and then you win at the YTL. Okay, YTL not fresh. I not tell you YTL today. So I not call. It's also not a call buy call sell, but I already mentioned quite some time ago. Okay, so this is some of the double volume that happened. So you can see after that there will be some of the bottom and the top reversal happen in this area. So that's mean that if you want to lazy to count, I mean lazy to use the what we call it, the demand and supply dynamic to ensure this area is very important, then you have to be using the double volume, then you can short it at this area. So this is the area that you have to be aware. If you want to trade, you will be aware of this. Okay. Okay. So you see, okay. Must follow. Yeah, we went done. Okay. You pay money and you follow. Yeah. So this is how actually you have to put yourself in the differentiation with the other traders. Okay. Everyone here, 126, 120 people, you are the competitor. You see. So you may buy, I may sell. You may sell, I may buy. So we are the compete in the real trading. Unless you're not trading, so if you do a trading, we are actually compete each other. You see. So we cannot go with the same way. I don't go with Vivian man. When Vivian buy, maybe I want to sell, or Vivian sell, I want to buy. Okay. So we don't go same direction man. So it's not difficult. Yeah. It's not easy to get everything do on the same time. Okay, so how actually you want to count this? I teach you very simple formula only. I don't teach you very complicated. So let us go see some of the stock that are available. So you can see that this is a KLCI. So I use KLSE. So this is KLSE. Okay, so we're talking about KLSE here. So this is a chart that you can look into it. So what happened is you can see that this is a double volume. So I change the color. So after that, so very easy for you to look into it. This is annual candle, also double volume. So this you can see that this is two double volume that happen in the chart. So this is on the inside one we don't do lah. So currently the price is sitting somewhere here. You see. So this is the bottom. So this is the area that is quite strong for the KOSE. So it might be sitting here for a while, or they will push up after this. So it might be a rebound tomorrow or the next day. So if this is not creating a new low, so meaning that the KOSE will be rebound. So if you want to know that, there is a different class where I can estimate about the what we call it, the movement of the KOS SE. So we don't focus that one today. Okay, so we just pick few of the power. So we pick YTL power. So look at the YTL power. So every single I use this one easy lah. So I use this one easy. YTL. Okay, YTL power or corporation also okay. So I put in the double volume here. So hopefully everyone know how to set yourself. So make our life easy when you buy a tools. Okay, don't buy a tools that make your life more difficult. So everything that you bought is make your life much more easier in the trading. Okay, we're talking about the bottom fishing here. So this is the we're talking about bottom fishing. After that, you can see this is chart. So we start here. Okay, we just start here. Okay, so we start here. So you can see this is the area that we're talking about. So this is the double volume. So if you want to buy somewhere, we will use the what we call it, the method later on. So gap up position. You want to buy, after you buy, you must know this is the very important key resistance area. So therefore, if you want to buy here, you know where is the price moving toward. So the price moving here, it might be stay around here. So you will know that this is the area of value for you to trade. You don't simply trade, no, area of value, okay, to trade. So after that, even though this one break out, okay, the antenna is here. So we call it the long shadow is on the top here. So this is also considered as a very important key resistance level at this area. If cannot shoot up to this level, forget about buying. Okay, forget about buying. Even look into the smaller chart. Later on we can look into a smaller chart. So you can see that the important key thing, it might be happen donkey years ago. Okay, I know say 1-2 years. So you put the resistance here. You can see that this is number of the candlestick that with the double volume bearish and bullish. It might be giving you a very important key consideration that, oh, this area I have to be very careful, because here it will be something happen on the demand and supply. But that one you have to learn, even though the more advanced. So how to determine the demand and supply here to make sure that this area is a very important key resistance area. So that will be a different different knowledge altogether. So after that, what you need to do is you just waiting for this area to break out, and then you buy. So after you buy also, you have to consider actually where actually the next area of value, for example here. So you buy lah, you buy stock, okay, actually the price is somewhere here. So after that you buy, we're talking about the price somewhere here. So this is the area of value that you trade. You don't simply trade, is it? So if you simply trade, you don't know. You trade somewhere here, or this is the area of value here, then you're not making money. Okay, and then you lost money. So we look into the detail, yeah. So I put it bigger, enlarge it. Later we come back and we go to see one or a few of the stock. So you see this is an area that very long on the trading. So how actually we want to use all three together? We use key resistance, area of value. We use the method to buy. Okay, so I will teach you three together. Okay, so gap up is mean what? So actually, essentially, the way the price strongly rise, okay, break through the key resistance level. So normally, this one, the jump out normally happen during off trading area, off trading time. So maybe you cannot see lah. So off trading, off trading time. So we're talking about off trading time. So after the trading, so there's many things that happen. So it's not good to tell you here. It's not a good thing. So but it's normally gap up position. It happen off trading. Okay, off trading time. So you can very hard for you to know that. Okay, after you jump, the market often pause and retest. Okay, they will test rest, retest the area. So they want to jump out, they test. Okay, so you need to look for the strong signal to confirm the uptrend. So doesn't mean that the jump up then you should buy. Jump up you buy. So not that easy lah. So you don't see, oh, Malcolm said gap up buy, gap up buy. No. Okay, there's something that you have to look into this area. Okay, before you buying. Okay. So that is very important, yeah. So I don't want to read the statement there, so you can just read it by yourself. So now we talking about the method. So first of all, you have to look for the double volume, regardless of the colors. So to me, regardless of the bearish or bullish, okay, no problem. Okay, understand? First scenario, first step, you go look for the double volume. Can give me reply yes in the chat room? Can? Okay. Secondly, you just draw a box at the higher price. Can? Yes. So secondly, you just draw a line, straight line at this area. during the waiting of the time, maybe 3 days or 21 days, what you need to do is you number 3, while you're waiting, you got to look into the key resistance area. Is it this is the one? Yes. If yes, then you wait. Plus the area of value. So not just looking on this one, So you're looking for the next one also, the top one. So for example, the area of value here. So the key resistance here. So therefore you can count that. Next time I buy here, the area of value is somewhere here only. So this is, for example, give me 30%. Then good. Then you buy. So there's a step number 3. Step number 4, waiting for the candle to break out the previous double volume higher price. Okay, this is number 4. We're talking about breakout higher price. Okay, my wording is not good. So breakout the higher price. I don't write correctly. Higher price. Okay, HP. Okay, higher price. So after a break of higher price, what you need to do is on the same day you want to buy, enter number 1 in the afternoon, 15:30 to 16:30. Then what you need to do is you're waiting for the time pass, and then afternoon you come back. So if 15:30 the price actually sitting on the top of this higher price, if the volume is double or the highest, then you buy. Enter. Okay, no call buy, no call sell, but enter. Okay, this is the first one. Second one, the key thing here is must be gap up. No gap up we don't want to do. Okay, break out and gap up different thing. So this is we're talking about gap up only. Okay, the next day also want to gap up. So that's important. Yeah. So hopefully everyone can understand. Give me a reply gap up in the chat room. Okay, get up. Okay. We also identify. Master Karen already give you a summary. Okay. So next time, Master Karen will teach you how to do 100% gap up and win. Okay, 100%. So after that, we're talking about gap up. Okay, gap up, we have a thing that happen. Gap up occur. Okay, when there is a substantial increase of the buying pressure overnight. Okay, after the day, or during the market break. So during the break time. So there's a people buying. Because why? Because people like some of the what we call it, the members want to parking 5 o'clock 700 they start parking for tomorrow 9 a.m. already. So you park everything and then the market players see wow, so many people want to play with me then next day I gap up. So that's why I said gap up normally happen is not on the trading hours so it's off trading hours. So what you do is you just parking. You park the price and then they go do count. They make a statistic. If I gap up I make how much, if not gap up make how much. We well, hopefully we for me I how to say, I want to say that if you want to park a price, in a sense it's good to me because gap up I can differentiate better the gap up is the fourth one or the correct one. I can enter, you see. So hard tricky, yeah. So if you gap up already, they want to trap you and then everyone go buy and then they trap inside. Okay, that is something that happen, you see. So you have to be very knowledgeable to do this, otherwise very hard. Okay. If break out with the long shadow can buy, you see, you ask a question. So if break out in the long shadow, long shadow tell this long, why sometimes this long also the price shoot up, you see. It's not because of long shadow the price doesn't shoot up, you see. So later we go see a long shadow, the price also increasing. Okay, so you need to know the demand and the supply dynamic. Otherwise, it will be very hard for you to understand. You see. So I repeat few times. So if you want to know that, you have to go find the courses and go learn. Okay, so gap up can have different implication. Okay, overall market context. Yeah, so we're talking about specific circumstances surrounding the price movement. Okay, so there will be the bullish indicator. So they are often is a bullish indicator. That's why easier to trap people. Is it? People think that wow, this is a bullish and then put the price in, they buy, and then they buying. So what? Uh, Bunao said so it's a buy. After that they put the price down and they create a very long, very very long width of the doji. Okay, that's what the market maker want to do. Okay, so later I will answer your question. So later, so we're talking about these two first. So gap up, not everything gap up. The the trend to be a continuous bullish, but it's an indication. Oftenly we say that it's a bullish indicator. Oftenly, so I can see here. So it's a bullish indicator, but not all. So that's quite you need to understand. So you can see that gap out over double volume. So not many people will tell you. So actually gap out is the only happen on the off trading. Yeah. So for example, we're talking about here. You see so this is double volume. So you will take this also can. This is the long shadow. See, you ask a question, I got the answer for you. Okay, so you see this is the actually this is a candlestick very long with the shadow on the top. So this shadow actually is equally the same. So after that the breakout position here. So this is considered not very long the shadow, but it's quite okay quite long So after that also long shadow, the price still want to move up, is it? So still continue moving up. The lacking of your knowledge is here how you identify this is the true or false. The true or false is happen here. You need to know the market demand and supply. Otherwise, very hard for you to identify whether this is true or not. Otherwise, you might be sold out. Am I right? If this is a breakout and then you buy in, then you might be sold out at this area already. You're scared. You worry. You worry the price going down already. Okay, you worry the price going down. Therefore, you sell it out. So this is something that you have to be realistic. You know what you know. You don't know, you don't use this method. That's what my advice is. You don't know, you don't use this method. This is the gap up position. Okay, so we enter here. So you have to test the market whether this is important, very strong resistance and support level. If yes, you have to be very careful. Okay, after you enter the market, the price go up, hitting the ceiling and the price going down. So this is a very strong support level. So this is a key thing that you need to know. After that go up again. So this is the key thing that you have to know. Okay, today class I don't teach you how to identify the key resistance and the key support. So therefore you need to learn yourself. So you need to learn yourself. So after that this one also gap up with the long position. So we go see this is PPT not made by today. So we can see okay, YTL power just now the one. Okay, YTL power after gap up again. So how about today? This is YTL power gap up today also increased about 1.5%. So who tell you with the long shadow you cannot shoot up? It doesn't saying that can't, but it also can. But the very long one, yes, I can agree with you. Very long one. How long is long? We're talking about 1 time more than the body or 3 times more than the body. So you have to be careful which one. For example, 3 times more than the body. Okay, 3 times more than the body. So if you want to have the body is something like this. Okay, so the width should be somewhere. The shadows should somewhere start from here, end like here. So this type of the candlestick you have to be very careful. Okay, this one you very careful. As long as like 1 time, for example, this box is an indication, something like this, it's still okay, still not a problem. So it's still not a Santa Claus. It's still a very good doji. Okay, this is Santa Claus already on the opposite side, so definitely no good lah. You don't believe Jesus Christ, is it? you don't believe Jesus Christ, then no good, is it? So am I right? So for those who are in Christian, you know lah. So the cross should be something like this, I think. So I also not a follower lah. So this is a correct Santa the Santa Claus, is it? I don't know what you call it. Okay, so I my apologize. So for those who are Christian, you can correct me. So for those who having the cross like this is wrong, I think. So this is a correct one. So after that, this is normal. So this is not a Jesus Christ. All right. So outside a bit. So nobody want to reply me. So you, okay, okay. So this is something that you have to be. How come nobody want to reply one? So are you following me, or I talking to myself and I get shocked myself? Can you hear me? Nobody reply. Okay, the next one. We're talking about the next one. Yes, so can hear, but we're talking about Santa Claus. Not sure already. Okay, so the next one we're talking about the just now the the what we call it the breakout. So how you count? Okay, we are counting the candlestick from here. So this is the double volume. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So by 14 days, the 15 day, the price break out already. Okay, you want to buy this day on the get out position. So make sure the volume is double on the bottom. So the volume is about double. Otherwise, you don't buy. Okay, the next one, the next day that we want to buy this one. This is important. Gap up again. So you want to buy this one. So you have to look into the morning, early morning. So if the price open high and then go reverse something like this, then it's a bullish trend, bullish continue trend. So you can buy at the area here. Okay, don't be parking at the ground, the lower here. So this is open price. So don't park below the open price. After you park, then they become the market maker receive all the information. Then they can make the market easier for their benefit, not for you. Okay, to make their benefit. So we don't want to have a demand and supply that happen part in the APP. So you will know that one item. So for example, we have we're talking about durian now, durian season. So you know the durian X number in the market, and you know also in the market Y is a buyer. Yes, they want to buy. Also buy. If you know this is a number of 1 million, if the buyer want to buy 2 million numbers, number not the notes. So we're talking about notes. So if this is a situation, if you are the market maker, you own this durian orchard. Okay, for example, SC Lim on the orchard. You think you want to sell at a cheap price? So people demand, the demand is 2 million, and then you have 1 million in hand. At the current price 30 baht. You want to sell at 1 million. I think you would sell at 60 ringgit, right? Per note, right? So if the demand is 2 million, or the supply is 2 million, or the demand is 1 million, I don't think you will sell 30 lah. You might sell 26 price per note. So this is what happened in the stock market. So too many parking, and then easy for the market maker to manipulate. Okay, not a good word, manipulate. So not a good word. Okay, so this is what we call that you have to buy at the second day here at the good position, and then you also can buy at the time that for example 11 a.m. using the indicator. So maybe another class, Master Karen can teach you how to buy in. So if this is the long shadow, you want to buy, you also can buy. So the long shadow also the price later on will increase again. So I answer without a question. So long shadow can buy or not. This side also long can buy, but the problem is here you cannot understand the durian story. You see? If you can understand the durian story, then you can buy. You have to go to analysis the demand and supply. Okay, so that doesn't mean cannot. So this is can you can buy in. So after that you have maintain here. Okay, you buy here. This how you maintain it. You can maintain at the strong area here. So for example, you're taking this at the higher price, or you're taking the 50%, or you're taking bottom price. Is how deep is your pocket, then you determine your cut loss at this three level, A position, B position, and C position. It depending how you want to cut loss. You see, there's no fixed formula for you to cut loss in the stock market. Everything is your choice. You see, everything is your choice. Okay, this is the first case. Okay, second case, after this you go look back and since 2001 when I start the class, how many stock that I mentioned actually shoot up. You go count and then let me know. Yeah, I don't want to tell you anymore. Tell you anymore. So if you know that I'm starting the class, I think it's 29 of September, something like that lah. Okay, I don't know, September, October. I start with Hong Seng 0041 until today. I talking about YTL, I talking about Top Glove, and I talking about all these Supermax. I think more than 80% the stock is actually up 1% also up lah. Excuse me. So 1% also up lah. So I 80% lah. I don't say 100%, but 80% is up. The key thing is you have to really understand the key knowledge in the stock market. For example, I say that you have to identify the key resistance area, not just looking at one of the thing that you should no lah, not I don't know 90 lah, Vivian. Okay, I put at 80 enough so I don't hit at 90 or 100 so you all go see yourself. Okay, so we're talking about the gap up here. So this gap up, this is a double volume. Okay, you buy in the afternoon 4 p.m. Okay, we're talking about 5 p.m. You just buy, regardless what is the price at the time. You just buy, you just enter the market, because this is the position that we can confirm that this is a bullish continuation trend. Then you just buy. Okay, some people ask me, okay, Malcolm, I see the candle actually like this. After I buy, the candle become like this. This is a quite silly question. I said I also know, I don't know, 3-4 o'clock you buy, after 5 o'clock become like this. I don't know. Is it? You have very hard for you to identify the next moment the candlestick become like that. No problem, even though you buy at a higher point here. So not an issue. If you follow this type of method, or next you buy at the area here, no problem. So we say that this is a very confident trading. So you don't hope today buy and tomorrow shoot up. No lah. So we buying and tomorrow is still continue sideways, is quite a good thing that you try already. So after that you see the price move another few days and then break out again. So the price move a bit few days and then move again. So after that shoot up and shoot up. This is a pull up position. We are not yet at the pull up position. We are only at the after the bottom fishing. We are at the post bottom fishing area. So therefore the price doesn't move so fast, but actually you can start trading already. You can start trade already. So you don't wait for this time. How many people want to go into the YTL power? You still remember teacher Vincent? You asked him when I told him to buy YTL is last year, not this year. So last year, you can ask him. So I told him you put all your money inside the YTL, either or power or the corporation you buy, then you can make some money. That's last year, so not this year. Okay, so we're talking about the real case scenario here. So at the moment, is what we call that, this is a pull up position. So I will teach you the pull up position is very near to the bull trap already. If there's a chance, no chance, you have to learn yourself. Okay, if there's a chance I teach you, no chance you go learn yourself. Okay, that's important. So we learn stage just by stages. Then only you can be a better trader in the market. Okay, so after that we can see that the breakout. So this is another thing that we're talking about. Yong Tai also same. Yong Tai also same. I not look into the Yong Tai lah. So I look into the YTL. Okay, you can see that this is only 2 to 3 days. Okay, we consider 2 days. 2 days breakout. So this is on the very strong position already. So they don't have a time to ding dong already. They want to quite quickly push up the price. They are rushing to push up the price. So they are on the what we call it the pull up position. So there's a different thing lah. Maybe this is something that you have to be what we call that, you have to familiar with the total what we call that the demand and supply in the market. So if you trade like a professional, so you learn one method, you have to add on another thing that you should work together. For example, here, so Yong Tai, if you cannot, you will see this chart are very difficult and then you cannot understand, you can use MCD. Okay, the MCD indicate that the market maker is there. So if this is the red color bar, so if this gap up position, especially the purple color is on the 45-degree uptrend, 45-degree, regardless of red bar how many lah, 20 also I do, 10 also I do, 100 no lah, 99 also I can do, depending on the area lah. 99 is on the bull trap already, so I can do, 99 also can do. So it depending. So this is a gap up, this is a gap up, then you buy, no problem. Okay, why is no problem? Of course you have to learn about what I say, that the key resistance and the support area. Otherwise it very hard for you to do it. So after that you can see this one not get up, don't buy, you see. So this one is gap up, this is a little bit gap up, you can buy, you see. So you buy after this, you see. So after you buy this area, this one you cannot buy lah. This one can buy. You only got 1 day to buy, 4 p.m. Only 1 day. So let us go to see the chart. I don't know about Yong Tai lah. Yong Tai today up or down, I also don't know. So Yong Tai, hopefully it's here lah, down. So you see, if you buy at this one gap up position, this candlestick. Okay, for the sake of arguing, so we buy at the higher price here. The higher price is the 415. Today cross after go up and go down, cross at the 465. Is making money or lost money? I want to ask you. So the key thing here is you can see that first of all, gap up position. So gap position. Here also about gap up lah. You will know, but this one not break out the previous one, so it's very hard for you to identify. Actually, you can buy this area, this area. You two also can buy. This one also can buy. So after that, you see the price is here. So actually you make money or lost money? I want to ask you. You buy here, actually you make money or lost money? The higher position, everyone know that it's making money, you see. So you make these two candlestick lah, for example, these two candlestick. How many percent? 27% in this few days, you see. So 1 week lah, we're talking about 2 weeks time. 26% you're making money on this type of trading. With, you can see the bottom here. When you buy that time, the purple line is a 45-degree, is the best. Okay, 45-degree, especially at the bottom of the 50% is the best. Okay, so you buying in at the area that we're talking about here, so you're making about 20%. Okay, so very hard lah. So after that, you want to ask me Yong Tai still can buy or not? There is a different class you want to know. So I cannot teach you everything, you see. I will teach you everything you cannot understand also, doesn't fit the purpose of the class, you see. So after that, we're talking about the how many gap up over the double volume. So we're talking about how many. So take this as your homework and then you go test. This is a Chaya Mata also. So the same stock with the last classes. So you go find yourself how many gap out and how many actually ways key resistance and support. You go do yourself and then post it in the chat room. Not many people dare to do, you see. I don't know why you want to shy and all this thing. Earn money also shy. So if you're talking about the bearish, can you do? Yes, you also can do. Okay, the bearish double candle also you can do. Okay, not only bullish, double bearish also can do. So this is a homework, and then the next one also homework. So we fix at the same thing that you can see. This is also the homework. So you just focus on the gap up position, and then you go count how many times actually you can buy. Remember, so we go back to the slide just now. I go repeat again. So this slide. So I hope everyone can understand. Okay. So when the breakout position at this area, if the same day is a double volume, you can buy at the 4 p.m. plus minus 30 minutes. So easier. So plus minus 30 minutes. Okay, I'm lazy man. I don't like so many things. Okay, so this is plus minus 30 minutes. The next day gap out, you can buy at the morning. So with the for the open high and then go down and then go up. Okay, so whatever WV also no problem. Triple W or four W also no problem. So you can buy. So this is on the tick chart. So otherwise you go to look for the 11 a.m. or you look for the 1600 also with the double volume. Okay, otherwise don't trade. So for the second, third, and fourth day, you can follow this type of the trading and go in. So we can see one last two stock. Okay, for the top graph, people that wow today drop already. So people see that very difficult in the stock market to make money. So this is a double volume. Okay, we move. This one is a breakout position. So this is not gap up. This is open the same price. Okay, this method is open the same price. Don't do. Remember, don't do. Today we only talking about gap up position. Don't do. So in this case scenario, so we will go look into it. This is the double volume. Yeah, my left hand is bent, so I don't trade on the left hand. So my left hand is bent. So you see, this is the last double volume. So you don't have a chance to buy. Okay, this is the double volume. You don't have you have the chance to buy. One day we don't consider, we don't buy. Gap up with the one day we don't buy. So this is the volume, we don't have a chance to buy. Okay, this is the double volume, no gap up. Okay, gap up here lah. Okay, gap up here. Oh, this is not gap up, so we cannot buy. Sorry, so this is a wrong. We don't buy. We don't buy. We don't buy. So we go down again. This one we don't buy. Okay, we go down again. This one, for example, here. Today breakout. Tomorrow buying. Okay, if today is double volume, 4 o'clock and buying. If not, tomorrow morning gap up buy. Okay, you make money. Boom, very nice. Okay, this one breakout. Okay, you see this breakout. So breakout position. Okay, let me draw. Okay, this is double volume. This is double volume. Actually, this is the key thing that the breakout at this day. Okay, the next day you buy. Okay, next day you buy, and then you people know that, oh, I buying. Okay, this is a good position buying, and then you lost money. So when you lost money at this level, if you want to maintain at this area, you see, you still safe, very safe. You maintain in this area, also safe, because only one day break down the candlestick, the lowest price only today. Okay, break down and tomorrow shoot up again. So you very safe. This one you buy in also. You lost few weeks, 2 weeks. You don't worry lah. If you talking about the how you hold the stock just now, so we talking about this is the pattern, and then your very strong support level should be here, and then you put in here, and then you can add some more. Like we went there, add more. So add more, you buy. So after that, you make money at this area. Okay, until today also, you buy in here, you still make money. Okay, you still make money until the price going down. Okay, so you buy here. So today is a breakdown for your price at this area. So actually, you still can hold. Okay, still can hold. So tomorrow, okay, if tomorrow the price continue gap down, what you want to do? If the price gap down, so anyone can answer me. This is beside the class already. So if tomorrow gap down, what you need to do? So your stop loss actually at this still area. Okay, if you're not making money, your stop loss is here. If you're making money, actually you can take the money first. Okay, you cut loss. If you're not making loss, you can keep the price until here. Okay, don't sell. You make money, you sell at this level. Tomorrow gap down, you sell. Okay, you make money. Okay, so that's a position for tomorrow. Okay, I don't know correct or not, but you can try that. So I not guarantee it's correct. So to me, I trade it very easy. Okay, I don't have a 100 method to trade. I only have one firm SOP to trade in the stock market. Okay, so that will be my key thing. Okay, hang already. So hang already. We also can end our class today. So very happy. I can end the class today. So the system hang and then I can end the class. Okay, again, what happened to Supermax? Okay, everyone thinking about what happened to the chart, something like this. Okay, so this morning also very good one, go up and go down. Don't worry lah. So no need to worry so much about the price going up and down. So what you need to look back is look back at the previous position. So where is the gap up position? So you have to know that where actually is the gap up position for the previous double volume. For example, we go see this is a gap up position. Okay, this is a gap position. Okay, first we talking about this gap up position. So we go see again, this is the double volume. So this is also a gap up position. So what you need to draw is something like this. Okay, you want to sell Supermax, you buy in, you should sell here because this is a breakout and then this is down some more. So you sell at this position. So today actually nothing to do with you. Okay, so first thing. So second thing, if you start in this area, what you need to do is you can see that this is the price we're talking about here. Here not gap up, but this one is gap up. So look into carefully. This is a gap up position. So you can maintain at this level. So taking a word, you can maintain at this level. Hopefully the price swing higher after this. Okay, so we don't have the D-next, we don't have others, and this today we don't stay here and have you to diagnose your stock. So no, not diagnose stock. So after you learn about the gap position, so it's very easy for you to know actually where is sitting on the support and the resistance. Okay, so therefore my class end here. Wish everyone have a good trade in the future and make more money for your trading. If you're not sure how to trade, don't trade. That's my advice to you. Very sincere advice to you. If you don't know how to trade, don't trade. Keep your money in the bank. Okay.